everyone. I hope you had a great weekend and welcome to the Premium Video Newsletter for Monday, August 12th, 2013. I was in the mountains with the family and got a chance to get away from the office for a few days. If you trade full-time, or even if you're a part-time trader, it's important to get away from the markets for a day or two. It will truly help you get a better perspective on the markets. There's a book that I highly recommend that emphasizes this point as well. It's called How I Made $2 Million in the Stock Market, and it was originally written in the 60s by a professional dancer. Yes, not a professional trader, but a professional dancer. It's one of those books that withstood the test of time, and I highly recommend it. It was one of the first books that I read, and I read probably every trading book that was released between 1995 and 2005, and I could tell you it's one of the better ones. Starting with the fundamentals, the US was quiet and things in the States won't really pick up till a bit later in the week. However, there was some international news that had an impact on the US stock market. The broad index opened a bit lower after a report showed Japan's economy expanded at a weaker than expected rate in the second quarter. Japan's gross domestic product increased at an annualized rate of 2.6%, which was weaker than the estimate of 3.6%. In addition, Federal Reserve asset purchase tapering talk continues to put pressure on futures, which could come as early as September's FOMC meeting. And that's the unofficial word on the street right now. The S&P, which is the broad market in the US, opened slightly lower and drifted for the majority of the trading day. There isn't anything major that would cause the broad market too much volatility today. What I'm seeing is a slow drift for the next few days while the market trades to and possibly through the 1680 area to the downside. The majority of the large caps are done with earnings, and what we're left with now is the end of summer, low volume, range-bound trading action, which is what floor traders live for. I wish I had something exciting to tell you, but it doesn't look like anything is on the horizon for the broad market right now. It's very hard to get a good sense when volatility is this low and trading is mostly random. The key is not to make something out of nothing and create trades when the best course is to stay away from this market right now. The small caps, which have been leading this market on the way up, are also range bound, and I'm not seeing any movement in this index either. But you have to consider what we went through the last 2 months. August for stocks follows big gains for July, when the S&P rose 5%, its biggest monthly gain since January. Stocks climbed that month after Fed Chairman Ben Bernanke reassured investors that the Feds would only ease back on its stimuli if the economy was strong enough to handle it. Then, just 1 month later, we began to hear talks about the Feds starting easing back the stimuli as early as September. So stocks are backing away once again and waiting for something new to happen, something concrete. Most subsectors, such as the semiconductor sector, are also on the sidelines and waiting for what fundamentals have in store for us later this week. I'm becoming more bearish even though we are at very high levels in most sectors. There's been lots of funds pushing money into different sectors, and if these sectors don't take off within the next few weeks to the upside and start creating positive returns, the funds will begin getting a bit nervous about the state of the stock market and will begin liquidating. It's not very common at these levels because the market is still very bullish and is in a strong uptrend. But this is when you have to really look carefully at the subsectors, and most of them are telling me we peaked out for this summer. If we break the support level in the semiconductors, we will more likely than not push the Nasdaq substantially weaker, and that may really cause a sell-off. So I'm watching the semiconductors very carefully, especially around these levels. The Japanese yen is lower after a report showed Japan's gross domestic product increase less than expected in the second quarter. In addition, Japan's corporate spending declined 0.1%, which marks the sixth consecutive quarterly contraction. The yen had a nice run-up during the beginning of last week, and now is sitting right above the 103 level. I don't think we will move much higher for the next week, at least not till we find some more support. I don't think this level will be it for the support, and I think we will go down lower to the base. The base is getting stronger, and I'm anticipating a move down to the 101 level for me to continue to feel warm and fuzzy about the upside in this market. If we break the 101 area and go lower, I will start getting worried about the upside to the yen. But as long as we maintain a stronger base, I'm okay with the fluctuating. And if you recall, I was anticipating this market building a stronger base, which is what needs to happen if we're going to stop the steep downtrend we see when looking at this chart on a weekly basis. And I highly recommend you look at this chart on a weekly basis, and this is why I'm so nervous about the upside. We have to build a strong base before we move substantially higher here. Better than expected Chinese industrial production data helped the Australian dollar to gain last week. However, and there's a big however here, the Australian dollar is lower today, as we were anticipating. Remember, markets resolve in the direction of the main trend, and the main trend in this market is down. So it was anticipated that we would begin moving lower once again after the dust settles, and we have. I'm now anticipating a move below the 89 level, and I'm almost certain we will test the low within a few sessions. The traders who went long this market and or covered their shorts are now getting nervous, and it doesn't take long for fear to strike again. As long as this market stays in the distribution mode for the next day or two, the bulls will start to get nervous and begin to panic, and then we will see some selling pressure, real selling pressure. But I'm not anticipating it for another day or two, and it won't happen till we get some more news out of China. But I'm not anticipating anything, at least not for this week. So if you're short, you're in a good position right now on the Aussie. The British pound seems like it's beginning to lose steam as well. I mostly trade this market based on technicals, and right now the pound is weaker against the dollar. I'm still bullish on the pound, and the uptrend has not been broken yet. I think a lot of the movement in the pound is going to depend on the news coming out later in the week. And my main concern is if we start moving below the 152 area. If we break this level, funds will start selling the pound fast. So right now we wait and see how the world economy is doing in the next few days. One market that I've been getting some questions about is the gold market. And if you don't trade spot metals or futures, you can trade GLD ETF, which tracks this market very closely. The market is right now at an interesting level because we have bullish triangle developing. The resistance level to the upside for this triangle is at the 1350 level, and it seems like we're gravitating there as well. Keep two things in mind. If we do break out, we have a very strong resistance level at the 1400 level, which, by the way, has been my target level this whole time. I know I said I would settle for 1350, but I would love to sell gold at 1400. The long-term trend is down, and as long as the economy really improves, gold prices should continue to decrease. It's going to take some time, but it will happen. There's no setups for tomorrow, and most of my signals are very range-bound. The market is too choppy to generate anything meaningful today. I will update you later tonight or tomorrow morning. Have a great night, everyone.